Steve Rattner, he was the chief architect, really, of the bailouts of General Motors and Chrysler. He's a former investment banker known as the Auto Czar. Mr. Rattner, great to have you here with the Street Smart team. The IPO, as you are hearing these details, is this kind of playing out as you expected and as you hoped?
I think it's playing out about as we have expected for some days or weeks now, and certainly much better than we hoped a year ago when General Motors came out of bankruptcy. I don't think any of us imagined that we would be sitting here a year later looking at an IPO of this magnitude and of this potential success for this company. It's really an extraordinary turnaround and an extraordinary sign of progress.
All right, so good things for General Motors, good things for the taxpayer. We talk about that $50 billion bailout. I mean, the Obama administration and the Bush administrations both gave GM money. Are we going to ultimately, in your view, see all that money paid back?
I think it's a question that's not possible to answer at this moment. It depends how quickly the government chooses to sell. It depends on the market. It depends on the performance of the company. But what you can say right now is that if you look at where the bonds in the old GM corporation are trading, it implies a value for the government stake of at least $40 billion, which I think is also certainly more than what we would have predicted a year ago when we went into bankruptcy.
Steve, a couple days ago, you did say that this IPO was maybe a tad early for some people's tastes. Why is that? Do you think it's the wrong market to sell into? Do you think the economic situation isn't right?
I think the market has been choppy at best, as you all know as well as I do, and you all know as well as I do that the record of recent IPOs has been mixed at best. And so GM is going into this market with a huge offering at a somewhat tricky time. And secondly, it is probably a tad earlier than most of us would like in terms of its return to profitability and its success. But having said all that, the government made very clear a year ago that it wanted to get out as soon as practicable. And this is a chance to get out and to begin the process of getting out. And therefore, I understand their decision, but we need to keep our fingers crossed until this is completed.
Are you upset a little bit that Mr. Whitaker is not going to be around much longer?
I'm a little disappointed that Ed is not going to be around longer. As I said also in recent days, it is not optimal for a company to have 4 CEOs in a year and a half. That's not best management practices. Ed was a volunteer to this. He was kind of drafted by us. He was a good soldier and did a fabulous job, but I do wish he had stayed a little bit longer.
Are you really impressed with the reorganization that he's run at GM? I mean, are you impressed with the cars they're putting out now? They still seem to take kind of a backseat to the progress that Ford has made.
First of all, with respect to cars, it's like making movies. There's a long gestation process, and you can't judge any management team after a few months on what cars they're putting out. There's a pipeline and a process to that, and we have to see how that unfolds. We always thought and said that GM's cars were better than the market gave it credit for, and now we can see that their sales have improved. But I think his most important contribution has been the cultural change. There's been a dramatic cultural change at that company, a much greater focus and speed of decision-making and everything you'd want to see. And as a result, the company is profitable. It is not as profitable as Ford. Their North America margins are about 4 percentage points lower, and there's no reason why they should be lower. And that's simply something that is going to take time and effort to close that gap. But I'm completely confident that it's possible. Whether it will happen, we'll all see. But it's certainly possible. I
want to bring in Bloomberg News' David Welch. He has been tracking the auto group here for us and breaking these stories. David, I know you've got a question for Mr. Rattner.
Yeah, Steve, they just changed management, obviously, and you've got Daniel Akerson in there. Do you think he's the guy for this job? What do you think he's going to bring to running General Motors to carry the company forward?
I've known Dan Akerson for 20 years through his telecommunications background and his private equity background. And Ed Whitaker and I together made the decision to ask Dan Akerson to join the board because we thought that he was a smart, tough, no-nonsense former CEO and private equity guy, which I personally believe is a great mix of skills. He's not an auto guy, and we can debate that for a good while. But again, I think he's very much in the Ed Whitaker mold of no nonsense. Let's make decisions. Let's move this forward. And I'm very excited about Dan's arrival. As I've said, I'm a little disappointed at the number of CEOs we've had to have, but I'm very excited about Dan.
Hey, Steve, it's Julie Hyman here. I'm wondering if you're allowed to buy shares, and if so, are you going to?
I don't see why I'm not allowed to buy shares, and I guess like everything, it's a function of price. We'll see where they come out, but I'm very optimistic about the company.
Where do you expect them to price, Steve? And where does Treasury? Let me ask that differently. Where does Treasury want these shares to price without being disappointed?
Well, I don't know what Treasury wants. They want the highest price. But as I said a minute ago, you have a proxy, which is where the old GM bonds are trading, which implies a value of about $40 billion for Treasury's total holdings in GM, which includes preferred and the debt that was repaid. So probably something like a $60 billion equity value. I'm doing this off the top of my head. But the important point to remember is that Treasury is only going to be able to sell a portion of its position here. And so as much as Treasury should and will want a high price, Treasury also will want these shares to trade well in the aftermarket so that they can come back with follow-on offerings and continue to sell down their position.